my name is Jean-Michel Deligny. I'm a senior advisor with Silverpeak, which is a London-based investment banking boutique. I'm also on the board of a bunch of startups, and scale-ups, mostly in the deep tech space. And I'm also involved in the IC Scaling Up, the acceleration program from the European Innovation Council. So vast question, the main change in the ecosystem is the sheer size of the investment. I mean, depending on which statistics you believe in, it's at least 10 times, perhaps 20 times the size of what it was 25 years ago. And with size comes specialization. And if I look at my own interest, certainly deep tech is something I'm quite passionate about. Tech2 started as a way to build a community of like-minded investors in technology. So 20 years ago, it was all about discovering the local ecosystems, through a bunch of trips to discover, the local countries. These days, it's much more, about sector specialization and events around that. And obviously, from my perspective, Tech2 has been very instrumental in keeping my network of contacts going. What is really interesting is in this current economic downturn, technology investing hasn't been as affected as before. And what is the real change is, technology is on the lips of everybody. Whereas it was probably a specialist interest 20 years ago, today everybody understands that technology will drive major changes, be it in AI, in quantum computing, genomics or climate tech. So technology is key. Well, I think, the way it's going to change is by further maturing. If you look at, where it is today compared to 20 years ago, we still see disjointing markets, we still see, a variety of stock option systems, and we still see risk aversion. But, what we will see in the coming years is more funds which are, 1 billion or more in size, something which is common in the US, which is still the exception in Europe. We will see more entrepreneurs and ex-entrepreneurs funding the next generation of startups. And with those two things, I think the risk profile will change, and for the better. So that will have quite a major impact, positive impact on technology investing. For me, what is key is, as you build your companies, involve non-exec directors early in the process. And it's is good both for governance, but also for learning from people who are a bit more experienced how to go to market. That was one of the main findings of the IC Scaling Up when we did a study with Boston Consulting Group. I think that's quite a big lesson to take on board. It's pretty simple, to be recognized and supported by an even greater number of tier 1 funds.